All right. Hello, everybody. Eric Vickery here, and I've got my friend Julie, the CPA whiz, with me. And seems odd that I've known Jeremy since I was in college at Simpson. I've known Julie. Her dad was my professor at Simpson. So I trust her 100%. And like we said earlier with Paula, we're not the experts, but we do have some information that we want to share with you. So thank you, Julie, so much for joining me. And I'm going to grill you for about 15 minutes and do the best you can with everybody. And then, of course, I know you're there to support dentists, and you have some dentist clients, right?
Mm-hmm. I do.
So if they want to work with you, you're able to take them on as clients if need be, correct?
Absolutely.
All right, awesome. So let's start with a real direct one here. Let's assume the team is laid off.
Mm-hmm.
They're filing for unemployment. Should the doctor file for unemployment? I know should is an interesting way to put that out there.
So several things to think about, right? So what's the max unemployment they can get? It's going to be what, $459 plus 600, right?
In California, they're looking at $1,000 a week. Yeah.
So some of you aren't in California, right?
Yeah.
But around that number, right? So the Paycheck protection loan can cover up to $100,000 in salary.
Yeah. Double that basically.
So if we're looking at maximum cash flow for the doctor in the next couple months,
What about this scenario? I'm going to collect I'm the doctor. I'm going to collect unemployment for the month of April, and then when I kick in my Paycheck protection plan program May 1st, then I start paying myself my $833.3 a month. Does that work?
Yeah, then you can pay yourself. Yeah, exactly. Your $100,000. Mm-hmm.
What's the drawback to a doctor collecting unemployment now versus some sort of tax credit later showing I didn't make any money in April?
So the unemployment doesn't affect any of the tax credits in this code, but you will be able to obviously take any losses that you sustained as a result of this year and the downturn. So one of the provisions is a 5-year carryback period for any losses. So if you do end up in a loss position this year, you will be able to carry it back against a more profitable year to get some taxes back.
So if I had a really good 2016, 2017, I can compare this year to that year?
You can actually take whatever loss you sustained for this year, and whatever that number is, you can take it back and offset your taxable income for that year and get a refund.
Oh, wow.
Yeah.
Can you explain more about how I would do that? What do I have to show? I'm taking notes
that'll
here
be
too.
when your 2020 return is complete and filed, depending on what your tax preparer has on that bottom line for 2020. That will determine, then there should be a conversation about here's the amount of your net operating loss. Here's what you can get back if we were to carry it back the 5 years.
Okay.
And if you don't use it up, then you can use it up on other years as well. But then there's actually an amended return, a special form that's filed to get that back.
Wow. Okay. It's getting complicated, but I'm glad you know what you're talking about. So I'm thinking doctors should be taking unemployment. What if they are two things here? What if they're sole proprietor? Can they file for unemployment right now?
Yes, they can.
Okay.
There's a voluntary program for sole proprietors.
Okay.
So it will depend on, what they've done as far as that's concerned, but there is a voluntary program.
And then what if I am an officer in my corporation and I did not check the box, to apply UI benefits, withdraw UI benefits out of my check? Can I still apply for unemployment right now?
I'm not sure.
Yeah.
Yeah.
I'm wondering if there's a special exemption because of COVID. I'm not sure either. It wouldn't hurt to try, I suppose.
Right. Sole proprietors are getting a lot of help. That's surprising them as far as like being able to call their income payroll for the Paycheck protection program. A lot of them are surprised that they're included in that way. Okay.
So would it hurt if I'm an officer of my corporation who did not check that box? Would it hurt me to go try for unemployment? Worst case scenario, I just get denied.
Right. It doesn't hurt you. Absolutely not.
And let's say I should have filed for unemployment on March 16th when I closed, but I didn't. Can I go back and do that? Do you know?
Yes.
Okay.
Yes, you
it's
can.
Retro. All right, great. I thought so too. Awesome.
Yeah.
So we talked about with Paula, anybody who makes more than $100,000 cannot include that. So you can include income up to
Right.
$100,000 in the Triple P program
Right.
when it comes to reimbursement. So 83.33 month, you should be back to making that by May 1st, let's say.
Yeah.
Do that. Let's see. You and I said something too before, and I said we should really start with that. Did we address everything we're starting with here?
Did you want me to talk about the employee retention credit at all?
Yes.
Okay.
Yes. Thank you.
So there's obviously all the employment, the sick leave, all of that goes on. But on the back of the bill, there's all these tax things that they're going to change for 2020. And one of them that people are talking about the most is called the employee retention credit.
Mm-hmm.
And it's a refundable credit against your payroll tax liability, which means that if you have more credit than you actually paid in tax, that you'll get the difference, is what that means. What refundable means.
And I saw it was 50% up to $10,000 if
up to $10,000 per employee. So that's the wages, and it doesn't.
Oh, per employee. Okay.
So per employee per quarter, $10,000. Okay. 50% of that's a credit.
But the caveat is I can't use Triple P to pay my team.
Right. You can't double dip.
It's one or the other. Mm-hmm. So most people are, it's I want them to be clear that they're probably not going to qualify for this exemption, this tax credit.
They probably won't if they go ahead and get the SBA 7A.
Yeah, SBA 7A grant is what I've been calling it. Mm-hmm. And which is different than, what is it, EIDL disaster loan?
Yeah, the disaster loans, the ones that have been around forever, but they've just expanded them for this period.
So you and I were emailing about this and talking about it. Yes, you could go get $10,000 right away. That's a grant. But if you end up getting Triple P, the 10,000 that doesn't get increased 10,000. So if you were going to get 125, you don't end up with 135. You just end up with 125 no matter what.
Yeah,
so,
the forgiveness is reduced by the 10 grand.
Yes.
Basically, yeah.
And if you get more than 10 grand, that's a loan. It's 4 years at 3.5%, something like that.
Yeah.
Okay.
Yeah. I mean, it turns into a normal loan.
Yeah. Let me ask you this. What if so forget about EIDL right now, disaster, SBA, I forget about that. And I just go get the 7A right now, the grant. I get $125,000 because that's what my 2.5% is. Mm-hmm. I wait the whole month of April. It looks like I'm going to open up May 1st. So I initiate the funds come in. I start paying my team. Some are at home, some are in, but I'm paying all my team 100% of their wages for 8 weeks. The money runs out and the business just isn't quite there. It's a locomotive and it's just not quite picked up enough. At the end of that 8 weeks, what would your opinion be on now going to try to get the EIDL as a loan?
Yeah, I mean, you have to do what you have to do, right? So if I mean, there's more stimulus packages there's like phase 4 and phase 5 that are still come. We don't know what those look like yet, but I anticipate that, if the order keeps getting extended and extended and extended, that there might be a package to extend some of these dates, perhaps. Yes. But at that point, if what we know now runs out, then I would be in disaster loan territory at that point.
Okay. So my thought is flip-flop them and put the 7A grant first, and then hopefully some other things are coming. Do you think there would be any part of that package, and this is totally guessing, do you think there'd be any part of that package that would be a relief to the owner that was in the form of probably tax credits or something that said your business was this low, besides what you talked about earlier, there would be some sort of additional compensation that would negatively be affected if, as a doctor, I went and filed for unemployment?
I highly doubt that. Okay. That's not normally something that they link is unemployment benefits and tax credits. That's not normally something they throw in the same pot.
All right. So let's go file for unemployment if I'm an owner, which we never thought we would say as a dentist, but I think that's appropriate now.
Yeah.
All right. I'm scrolling through here. Anything else you want to add to the retention?
I wouldn't be surprised in the stimulus if they took away the double dipping prohibition on that. If they use that as kind of the next phase of like, once this runs out, I mean, nice. Who knows? That's all speculation, but.
So we could potentially get 50% up to 10,000 per employee tax credit if we were paying them through Triple P even.
Yeah. I mean, I wouldn't be surprised. Like I said, I've seen some other speculations about that.
Wow. That's awesome. Awesome.
They're trying to write the law and then they can pull things out and put, plug and play.
That'd be great.
So I don't know. We'll see.
I think there's so much good news for a small business right now because this really would close so many businesses, but I think there's so much good news right now. What are your thoughts on implications down the road for retribution to the government? What are we going to have to pay for all this?
Yeah, that's a great question. I wish I knew.
Yeah.
I mean, in fact, when I posted this bill on my firm page, there were some people who wanted to talk about all the negative things
Political
about it.
side of
And
it, yeah.
I'm focusing on what do my clients need? What can I get them? What's the hopeful, positive, happy part of this? And obviously someone has to pay for this at some point. So I'm sure that we will be part of that solution in the future.
And what you don't want to be is somebody who didn't take advantage of it now and you still got to pay for it later.
Right. Exactly. Yeah. There's no reason. I mean, every single one, there's not even one of my clients that I wouldn't recommend it for. They're all trying to weigh the difference of all the different options. So as you can see, there's so many different options, and they don't all work in all scenarios. But I think the Paycheck protection is definitely the right choice for.
So true. So true. I completely agree with you. So here's from Dr. C. She says, once we get the money, do we pay our team as usual through our Paycheck program? Which I said yes to her. Yep. This is May 1st, let's say. They're back. We're hired. All right. If they're not actually working, they're not coming in. How do I post that? Is that paid time off? No, I think that would just be like a salary, right?
Is it for a covered reason under emergency sick leave, or is it just that they're not coming off? Okay.
They're just not coming in because, hygienists aren't deemed essential at this point or whatever, but the doctor's office can be open to do fillings and crowns and things like that. But they haven't brought hygiene back. So I can imagine the hygienists are still at home, but we still got to pay. If we had 8 employees before, we got to pay 8 employees now. So I'm still paying them to be at home. They might come in and do phone calls and things like that, call their patients. But she's asking, how do I classify their pay? Is that just regular hourly wages, I would presume?
Yeah, I mean, it is regular. I mean, I think if I were a dentist, I might want to see that as a different classification, but it's treated like regular pay for every other purpose. It's taxable to them. It's, all the things. So
when you say taxable to them, you mean the employee to them?
The employee.
Yes.
Yeah, it's just like regular wages would be treated.
Okay. I would think you could create, like some of my clients use QuickBooks payroll, assisted payroll. You could put hourly wages, create a new type of pay and put in their CV-19 or something.
Right. A new payroll item, call it, the same type as your normal pay, but just, give it a different
something.
title.
Okay, great. Will taxes be withdrawn from their pay? Yes. It's not completely free. Government's going to get some of it back. Can they still contribute to their 401k with the pay?
Yes, they can.
Oh, good.
And I'm sure you know this, the Paycheck Protection Program can also cover.
Make sure it's included. Portion. Yes. If you've been paying them all along, it should be included in this. Make sure you get your 2.5% to include that money. Do we pay any payroll taxes or any other tax?
Who's we?
The dentist, the owner.
Yes, they do. Well, they do, except for when you bring your people back and they're on payroll. And if they have covered reasons, so if they have, that 80 hours that they're going to get because their kid's out of school, so bring them back, but they're not working, right? So they're on your payroll, but they're taking this emergency sick leave. Then you will be able to retain their FICA taxes and their federal withholding to get the refundable sick leave credit on their.
That would be a credit back to you. The government's 100% covering if you had to do that.
Yes.
The only way we're going to have to do that is if we rehire them back and then the school says kids aren't going back in, I got to pay them for 2 weeks, right?
Right. Or somebody gets symptoms or diagnosed, or one of the other covered reasons.
The other side of that is COVID-19 diagnosis. They could be out for 12 weeks, of which the first 2 weeks you don't pay, the last 10 weeks you pay, correct? Okay. That money that I pay them through PPP possibly would be a tax credit back to me, you think?
The money that you pay them is sick leave.
Yep.
Meaning that the government is going to refund you in full.
Yeah.
And they will either refund you by way of, you can't double dip.
Yeah, that's what I'm thinking.
Right? So they are going to make sure that your paycheck protection loan does not include whatever amount you were already refunded by the government. But the paycheck protection loan does include more than just payroll. So I still think a lot of people are going to be able to get the full forgiveness, even if they do.
Yeah. We're going to be paying them their full paycheck for 8 weeks. So even if somebody was in that 2 week, my kids are at home thing, they're covered. Even if they got sick, hopefully not, we'd be paying for 8 of the 10 we'd have to pay anyway. So I don't think that really is going to play a huge role. And it's my understanding that if they're laid off before this all goes into play, they can't file for that anyway. They're going to be getting unemployment benefits. The business isn't open to pay them the 2 or the 10 weeks. That makes sense?
Yeah, I think so. I think in the math, when the math works out, there are some people that are going to be able to do both because the paycheck protection does include more than just payroll. So
Okay.
obviously everyone's doing it based on estimates of what they think their expenses might be. They might be more or less. That's all going to just be have to come out in the wash, right, with the accounting at month end. But you won't get the same money for the same purpose twice.
Yes, can't double dip it. I get that.
Yeah.
Okay. Here's another question. This is pretty straightforward. I think this is just yes or no here. I think I know what you're going to say. I'm a sole proprietor and I haven't been paying rent because he owns the building,
Yeah.
I guess.
Yeah.
And he says, can I now pay rent to myself and include it in my CARES Act loan?
No, in fact, you can't actually pay rent to yourself.
Okay.
That's not actually allowed. Not that there aren't people who do it, but you can't pay rent to yourself unless you have a separate entity.
So you'd have to have a rental company set up, a corporation that is a business before this all took place that you were paying rent to, who then paid you a percentage of that income from the rental
Right.
company.
You would need to have separate entities set up for that to work out.
Yep. Okay. All right. So the second question that was asked, how do I figure out the amount, does not apply. So we'll skip that. All right. Let's see. We talked about sick leave. We covered that. File for unemployment. This is a series of questions here, and I don't remember who sent me these. Oh, I know who sent these. This is a Reading dentist, actually.
Yeah, there's a lot of HR.
Yeah, and so I'm not going to bore you, or not bore you, but I'm not going to pull you through that because that's not your thing unless you saw.
Somebody asked, in creating the average of expenses, salaries, what rule is used?
Yep.
And the way it's worded is average monthly.
Yep.
For a year. So I've seen varying information requests from different banks asking for more, asking for less, asking for. So, but that's how it's worded, as average monthly earnings. So my logic says
from a year ago
run through February, you're looking at March 1st of last year to February 28th of this year, and you're averaging it out.
Yeah. Think of a fiscal year, March to end of February 2020, right? March 2019, 1 to end of February 2020. Take that total payroll, divide it by 12. However, you cannot include that surplus over $100,000 for any employee. So you back that back out at the end.
Right.
Okay.
Right.
I don't know what they're going to require. I know you've got to do things exactly by the books, and there's obviously some gray area because we're ahead of the curve here if we're using Jeremy and getting application, because the application doesn't exist yet. And so we're putting a guesstimate in. Would your opinion be that if we guess high, that's better than guessing low because they'll just reject something at some point? I mean, I know you're by the T.
Yeah, so. I'm thinking a lot of banks will probably just reduce the loan request. They'll probably have to reach out and say, hey, initial this and send it back.
Yeah.
If it's too high, that's probably going to be easier than increasing it. So
yeah. Okay.
Yeah, I mean, I would say estimate high. I don't know, every bank's going to interpret these things differently. Some of them you might just be able to send them reports right out of QuickBooks, and some of them might require, something more. So
okay.
I wish they would standardize that.
Yeah.
But I don't think it's going to be standard.
And I love using Jeremy right now because right now he's saying it's just get me the number, tell me the employees, and let's go get the money. And I'm sure he's going to ask, So my guess is I would average high. I don't know that 2.5, 2 is going to pay for employees. The half has got to pay for rent, utilities, and everything. That's not that much. So over 8 weeks. So I would guess a little high. Don't be unrealistic because then you're just going to get, audited by Juli, by somebody from the government, probably.
Yeah.
Let's see. S Corp, we talked about that.
Somebody asked about if they sell in 4 weeks, or if they sell the practice before the funds are used up.
Yeah.
And honestly, if you've used the funds for what you said you were going to use them for, then they're going to get forgiven. They're not going to.
You're not going to owe it after you sold your practice.
They're not going to tax you.
My thought is don't go into any big business transition transactions right now. Get to the other side of this and collect unemployment, pay your employees with some free money, get to the other side of it, and don't give that sort of relief to somebody who's buying your practice because they're taking all this risk and all the paperwork's going to be a mess. Just get to the other side of this, get the locomotive going again, and then sell the practice or buy the practice. Would you agree? Okay.
I agree. I have a few clients that are kind of mid-transaction and they're just kind of hitting pause.
Pause button. Okay.
So.
This is, I think we said this, there's no way you're going to be taxed on this money that's coming to you from the government, right?
It's all tax-free.
Yeah. All right.
Yeah.
If we guess high and there is surplus at the end of this, the 8 weeks, tell us what happens to that money that's there. If we choose to accept it, reject it, what happens?
If we don't spend it, is what you're
Yeah.
asking.
Mm-hmm.
Well, you can easily just pay it back at that point if you wanted to, or
Yep.
you can hold out and have it amortized next year starting January 1st.
Okay.
I don't think I have real clear details on what the interest rates are going to be at that point or how that's
Okay.
going to look.
All right.
Yeah.
I've heard no interest for like 10 months. I've heard no interest for 12 months. And then I've heard 4% for like 72 months after that, or 10 years or something.
Yeah. Yeah.
Something crazy. So we'll see,
Yeah.
but you don't have to take the money if you don't spend it, right?
Right.
Okay.
Now, have you guys talked about the existing SBA loans, what they're doing with those?
Go ahead.
They're subsidizing the payments for 6 months on
The
existing
interest.
SBA loans.
The interest or the whole payment?
Well, it says that they're subsidizing the payments.
Okay.
But then there's other language that says that there's deferring, but the final language says subsidizing. So I think the point is definitely check in with your SBA lender and find out exactly what that looks like for you. I don't know what the application process is, but they made it sound like it was going to be automatic.
Prior to February 15th of 20, if it's not an SBA loan, it's interest only. I just talked with a client this morning. He explained this to me. He said, I have an SBA loan. It was before. They just opened a practice a year and a half, 2 years ago. And that SBA loan, now payment is going to be made for them.
Yeah.
Separate from the triple P thing.
Mm-hmm.
It's just because it's already an SBA format. The SBA is going to take that on for them for 6 months, which I thought was huge.
Yeah.
How does that work then? Does they just add 6 months on the end that they got to pay, or is that forgiven?
They're saying subsidized, which means they're going to make the payments. I've only talked to one banker, and that was his interpretation with that was that they were going to automatically make the payments.
Yeah.
But as we know, everyone's still trying to interpret exactly what that means. So.
Wow. Yeah, that would be amazing. So if you have an SBA loan already in existence, talk with your SBA lender and get that in addition to the triple P 7A grant. You want them to subsidize your SBA loan for 6 months and take advantage of that government assistance. Yeah. Wow. That'd be amazing. Absolutely. What else, Julie?
Estimates don't need to be paid right now. Don't pay any taxes. You don't have to pay. Keep your cash in your bank. But
so let me paint a scenario. I'm a quarterly payer, and I know I have an April 15th due. You're saying my quarterly payment for April 15th I can hold till July 15th?
Yes. The first payment, this is kind of silly, right? This is the government. The first payment is delayed to July 15th, so your estimate for 2020, in addition to anything you owed on your 19 return.
Yep. Okay.
The second payment is still June 15th. So hopefully they change that, because that's a little odd.
And there's a September payment too.
Yes, there is a September payment as well. But the other thing to keep in mind is most of you have gotten estimated vouchers, but you already know your income is going to be less for 2020. So don't pay those estimates. Recalculate it.
Wow. Okay.
Because you're likely going to have a lower tax liability this year because your income is going to be lower.
Now you got me thinking about my quarterly that's due in like 15 days. So yeah, don't recalculate it if you can. I mean, obviously everyone, the name of the game is keep the cash in your bank right now. Don't pay off stuff you don't need to pay off. But I still have to file by April 15th.
No, you have to file by July 15th.
So I already dropped off my taxes, whatever, and they're ready by April 15th, no big deal. But if I haven't dropped them off yet, I don't have to file by April 15th now?
Nobody has to file by April 15th, even if you have. I mean, they could get your return done and you could wait to file.
Okay. All right.
But even if you do file, you still have till July 15th to pay. Those are independent of each other.
Okay. So I thought it was you have to file by April 15th, but you don't have to pay till July 15th. You're saying both are extended till July. Wow.
Yeah.
Okay.
They did them separately. They did they did them 2 different times. But they've done them both now. So even that and FTB, same thing, July 15th.
Wow. Well, hopefully everybody stayed tuned into this all the way to the end so they get that useful information, because I think that's huge for people. That's great. Okay. Your email address is in the CC of all the emails now, so hopefully that's not bombarding you. So if anybody wants to contact Julie about their taxes, about filing, please do so. She's amazing. And so what else? Any other advice, recommendations?
The only other thing that has been a big deal for a couple people, so I just want to mention it, if you have a building that has not been depreciated for very long, or is not almost fully depreciated, there are some strategies that you can use to get more money in your bank faster. So let me know
for
if
cash
that
flow.
applies to you. It's called cost segregation study is the strategy if you want to do some reading on it. Your tax preparer might be aware of it as well. So I just want to throw that out there as a way
Wow.
to potentially get extra depreciation and more money in your pocket.
Awesome. Well, that's huge. So I own a building and I have been depreciating it, but now I want to get a cash advance on that depreciation. Basically, I can get it, access to that money.
That's essentially how the result works. Yeah, there's
The
a lot
simpler
behind all
version.
of that. There's engineers involved and a
Okay.
study performed. But yeah, there's a way to accelerate. Most commercial buildings are depreciated straight line over 39 years.
Okay.
And so that is the way that most of them by default get set up. But depending on the size of the building, the type of the building, there can be much more accelerated depreciation options, especially with the bonus depreciation that we got a couple years ago.
Okay.
So that's how all that works.
Awesome. Good to
Contact me if you
know.
want more.
Awesome. Great. Thank you so much, Julie. I really appreciate your time. I'm going to get working on the video and I'll send it out to everybody soon.
Thank you.
All right. Let's see.